Will September 8th be a make or break day for Bitcoin? Well, depending on what the stock markets decide to do after the holiday weekend, we could be in for a few surprises. But regardless of how that actually plays out, I have some incredibly important charts for you that will help give you some perspective on just where we are in this market cycle and why it is important not to get shaken out at the first sign of trouble. My name is Lark, and this is where you subscribe for all of the hottest and all of the latest happening out here in the wild, wild land of crypto. By the way, if you want to start receiving a weekly investor report, absolutely jam-packed with tons of critical information, including technical analysis on Bitcoin and leading altcoins, an in-depth research report on a trending cryptocurrency, an AMA with an industry leader, wealth preservation tips, market trends, tips on the hottest upcoming token sales, technology reports, and so much more, then you should absolutely consider subscribing to Wealth Mastery. For less than $10 a week, me and my team will save your time and deliver to you the market research that you need to know to stay ahead of the curve in this fast-paced market. There's a link in the description where you can become a member today or simply learn more about the newsletter. Okay, so, you know all of those coins that you were waiting for better entries on? Oh, if only it would go back down to whatever price, I would buy it then. Well, it seems you're getting that wish. The trick now is to psychologically be able to see past the fear and take advantage of the opportunities that you're seeing in the market right now. If we look back at historical precedents from the previous bull run, the times of absolute maximum financial gain were had when Bitcoin retreated back towards the 200-day moving average. Bitcoin, of course, is the barometer for the entire cryptocurrency market. So when Bitcoin's there, basically all altcoins are also a good buy. In my opinion, there's nothing to say that this bull run is over. I feel like we're still just getting started. Even if we get a brutal day for equity markets on Tuesday, it's all just temporary noise. If we look at the charts here from 2016-2017's bull run, then you will see that if you had bought the dips, you would have made a killing as the market moved up. This is still an uptrending market, and in an uptrending market, dips are for buying. In a downtrending market, dips not so much for buying, but we have had some massive trend reversals in the last few months, which are very, very hard to ignore. And yes, we are in an uptrending market. There has been a massive reversal in the trend. This chart here shows how the Bitcoin 4-year cycle plays out. The Bitcoin halving, of course, the blue line here was a massive milestone for us because it marked the start of a new cycle. You can see previously we have the green, we have the big run up. We have that correction, we have that accumulation, and now, of course, we're in the first steps of a new bull cycle, meaning that we are heading to maybe $100,000 or higher. It gets messy, it's uncertain, but right now, the demand for Bitcoin, it is increasing, and at the same time, we have the supply from miners decreasing, meaning there's less Bitcoin available to buy on the open market. It's just a game of time and patience, and having the discipline, of course, to ride out your investments because, of course, you research them, you believe in them. Being an early adopter in a market still in its early price discovery phases, it's volatile, it's crazy, and it's not really mentally easy all the time. And if you're stressing out on these drops, then chances are you are too deeply invested. Remember the old saying, never put in more than you can afford to lose? It's true. It's true. If you're panicking right now, then let this be a lesson to you in both really how the market cycles work and try and understand the bigger picture and see the bigger picture, not just the minute-to-minute movements, but also to examine your investing behavior. Greed is not your friend. It's funny because literally on Tuesday last week, I made a video about selling your cryptocurrencies and strategies to cash out. It is one of the most important things that will separate the winners from the losers long term in this market. Consistently paying yourself, consistently taking and compounding profits. That's where it's at. Then you have money to buy dips when they come up. If you have not learned how to take profits, then do please watch the videos that I've made on this topic. They're highly instructional and informative. Anyway, so we've only seen Bitcoin come down by 18%, which, you know, I know it sounds kind of dramatic, but is it really that dramatic? Because the previous bull run had around half a dozen drops of 30% or more, and of course we had a 50% drop earlier this year. 18%, it's really not that crazy, guys. Come on, look at the run we just had. It's nuts. And if we pull all the way back to the 200-day moving average, that would still only be a drop of 25%. Obviously, the 200-day moving average is a very key line, but let me show you this for perspective. This was January 2017. Bitcoin had a brutal correction of 37%. You will notice that it did not touch the 200-day moving average because it was still an uptrending market, right? It was just coming back to test the general area of support. Now, some people did panic sell their Bitcoin for $733. Those people are forgotten, washed away in the tides of history. The people who bought the dip basically entered the Hall of Fame of OG strong hand investors that are able to see the opportunities when they arise. Be fearful when others are greedy, and greedy when others are fearful. And hey, you know what? People are afraid right now. Fear is here. Fear is in the market. In fact, the Bitcoin Fear and Greed Index is showing 41 at the moment, which is about a 50% drop from earlier this week. The only question is, how are you reacting in the face of the fear in the market? And look, I want to be clear. No one really knows what the market's going to do next. We could drop further, another 10% drop again. That'll bring us down to the 200-day moving average, testing that as a line of support. So that would be crazy, but not that crazy. It's only $9,000 for Bitcoin. That was, price of like 2 months ago. The CME gap still has not been filled, and that's around $9,600. Maybe we'll fill that in the coming hours. Altcoins could easily bleed another 20 to 30% before bottoming out, or not. We could see a reversal soon. So it just gives you some perspective, though. Dips are for buying in an uptrending market. But if we are going to see farther losses, what could cause that to happen? Well, the same thing causing the current market drop, and of course the same factor that could cause the price to go back up on Tuesday as well, and that is the equity markets. Yes, I know DeFi has been insane. There's been exit scams galore, and yeah, Ethereum fees, they've been crazy, going through the roof, and yeah, Bitcoin miners are selling, all that stuff. Yes, and whales are running their games as well. But what really matters right now is what's going on in the big picture. So that goes back to the main thesis of this video. Will September 8th be a make or break day for the Bitcoin bull run? Well, honestly, I think that it strongly depends on just if of course, the equity markets go up or down. You see, the S&P 500, it fell dramatically on Thursday and Friday. Potentially that has been enough selling pressure already, and the market's going to rebound when they open back up next week. And of course, Bitcoin went down big time with it. And of course, it continued its drop over the weekend because Bitcoin is always trading unlike the equity markets. Now we have that 3-day weekend to wait to see what will happen when the equity markets reopen after Labor Day. Now, this could be a big deal for Bitcoin, considering how closely the fate of Bitcoin has been tied to the equity markets over the last few months. It's been very close. It's kind of a worrying relationship at times, and it moves back and forth. It's not always as correlated, but it has been rather correlated over the last few days again. Of course, the Federal Reserve, they've been pumping markets higher and higher and higher over the last few months, creating kind of an unreal effect, a fantasy effect on the markets. The real data from the economic numbers, though, it really doesn't look good. Record unemployment numbers, record numbers of people at risk of defaulting on mortgages and unable to pay their rent, loads of small businesses closing, massive downturns in GDP, massive downturns in consumer spending. All those things, they don't happen in a vacuum. These will have effects on the market. And obviously there has been some big drops and stuff, but to see this big rally with all that going on is kind of crazy. And while the Federal Reserve has done a good job up until this point of stimulating the markets, it makes it hard to keep moving forward. It doesn't continue to work the same. You get diminishing returns, and those compound even faster the more money that you spend. And Congress has been unable, of course, to agree on a new stimulus package for the entire summer, meaning that the market is, the gas light's on. We're starting to run on empty here. We need some more stimulus, Jerome Powell. Come on, man. Hit me up. Now, do you guys remember George Ball, the former chief of Prudential, and the very, very unlikely Bitcoin bull and his prediction about Bitcoin that's going to explode after September 7th as wealthy investors start piling into it? Well, tick tock, because we are almost at that date. This, of course, was the cutoff date for which he saw big investors rebalancing their portfolios. And, of course, because of all the concerns around the dollar and the markets overall, he thought people would move into Bitcoin. Probably also gold, but he didn't say it particularly in an interview. Honestly, it's a bit of an arbitrary date, but what we want to see, though, is the macro investor crowd actually piling into Bitcoin. We know they're piling into gold. Bitcoin, yes, as well. We definitely see that happening. But the thing to realize about Bitcoin is that it's just starting to happen with the big macro investor crowd. And realistically, we are going to see them continue to do this because we're going to have a few things happen. One, lower interest rates are going to be here for the next few years. Two, further injections of money by the Federal Reserve into various parts of the financial system are really going to continue, so we're going to see lots more of that happening. And three, of course, another round of stimulus, so more money printing basically is going to happen. This will keep markets moving higher for the foreseeable future, which of course will continue to push macro investors into gold and to Bitcoin, and will of course also push stocks higher. So the current correction in the stock markets, it may just be a normal correction, especially for tech stocks. They were all, super overheated anyway. So maybe it was quite a logical thing to see this big correction happen and them to come back down to more reasonable valuations. Perhaps the 3-day weekend is going to be just enough time for the markets to chill out, and we'll see a bit of a rebound happening next week. The Federal Reserve is also having a policy meeting on September 15th. So, of course, we can expect that they're going to announce more support for the markets. I'd be quite honestly shocked if they didn't. The real question becomes, how long can they kick the can down the road? My guess is for quite some time still. But this is the market, guys. Get used to big drops. Get used to the insanity of the markets. We are still in a bull market. The bull market has not been canceled. Even if it may not feel like that after seeing such a big drop, we are still in a bull market. But it's certainly going to be interesting to see what happens at the start of the week, whether or not we had enough selling pressure last week in the equity markets and that they're going to have a bit of a rebound coming into next week. And if they do have a rebound, I would expect Bitcoin to follow up. If we do see another sharp sell-off, though, that's likely to be bad short term for the cryptocurrency market. So that is definitely something to keep in mind. It's unfortunate to see our fates so closely tied together, but they are. Anyway, your question for today: what do you think is going to happen next week with the equity markets? Are we going to see markets have a good rebound? Are they going to move back up? Are we going to see new all-time highs for the S&P 500 in the next week or two? Or is this a bit of a time of reckoning? We're going to see some more corrections coming in. Is it going to be a healthy correction, or is it going to be like, Great Depression 2.0? It's all over, guys. Let me know down below in the comment section. Thank you so much for watching today's video. Hope you're having a fantastic weekend. Long live the blockchain, and peace out till next time.